Good morning from Los Angeles. I don't know if it's so good or not that good, but welcome to Power Hour. I am actually flying blind today. I'll explain that shortly, what the reasons are. Well, let's start with that. Actually, let's start with the bad news. The bad news is, as you all know, my main trading account is at Schwab. Unfortunately, last night in the early morning hours, CrowdStrike had a software update. I guess Schwab uses CrowdStrike for um, internet security issues, and I haven't been able to log on to my account. So today I'm just going to go through the topics and hopefully answer some questions. I mean, I have a backup account. I have my Robinhood account. Oddly enough, Robinhood is functioning. Figure that out. But $1 billion company like Schwab, no access. I tried to call. In fact, I told you guys this a couple of weeks, I don't know, maybe 4 or 5 weeks ago about Serve Robotics, those little goofy-eyed robots that I see everywhere in Los Angeles. I had accumulated a nice position. Hopefully you did too, right around $2 a share. And today, guess what? Stock is 8 in one single day, from about 2.5 to 8. What's happening with it is that NVIDIA bought over 10% of the company, and stock is up like 300%. And so in after hours yesterday, I was able to sell because I could log on. I have still decent sized position left, but today I can't sell. Well, maybe in every bad there is some good. The fact is that I probably would have sold at 6. Now it's 8. But hopefully by the time Schwab fixes the problems, and the phone support obviously is like everything else, every other company. Obviously they're getting inundated with people trying to buy and sell, but then, how ridiculous is that, right? But anyway, so welcome to Power Hour. That's a good problem to have. It's my problem. I wouldn't worry about it too much. I do know what's happening to the market. Obviously, I have a backup account at TD Ameritrade, so I am able to transact to a point. Welcome to Traveler, William Turnley, Ryan Montgomery. Hello, everyone. So let's take care of some business. Well, thanks for joining me at Power Hour. If you want to receive a free finance newsletter, please go to Sergio at sergioavadian.com and sign up to the free newsletter. I've been saying it for a couple, 3 weeks. I'm trying to get about 50, 60, 80 people who are interested, so it's worth my time to do it. But if you haven't signed up, please tell your friends, relatives to go sign up. I'm definitely going to continue doing what I'm doing here on this channel. So I'm up to 975, I think, subscribers. So please help me get to 1,000. 1,000 is a milestone, obviously, but I'm going to continue doing it. I'm not doing it for money. Obviously, you guys may know or not know, YouTube is not what everybody thinks it is, but I love educating. I love informing, and all the trades so far, truly, that I put out for you guys when I go through my watch list, they have worked beautifully. One being SERV, Serve Robotics, obviously, Tesla and AMD. And the other thing is you guys can follow my Robinhood account. If you missed it, go back to last week's Power Hour. There is an app called After Hour. All you have to do is download the app. You can follow my small Robinhood trades in that fashion. Once you download the app, you have to search for Serge, SERG, number 8, STOK. And then I verified the account, so you guys will be able to see, although there's a little bit of a delay, but at least you guys will be able to see what I'm doing. And if you want to participate, you can participate. So I think I took care of all the business I need to take care of. That's about it. Yeah. So with that said, let's get into the weekly topics. The weekly topics, obviously we know what happened last week with former President Trump's assassination last weekend, the attempt anyway. So it seems like he's a shoo-in to win, because there's also talk that Joe Biden will pull out this weekend. They'll have an open convention, open Democratic convention coming up with 3 or 4 nominees. It's going to be interesting. This is a first in, I mean, not a first in our history, U.S. history, but it definitely is not the norm. I mean, imagine another inch the other way, or if Trump didn't turn his head to the right a little bit instead of getting nicked in the ear, his head would have blown off in front of a worldwide audience. So things are really getting weird. Actually, after that happened, the market, took off a little bit more, but you could tell it's running out of gas. And believe me, please go watch it. Go watch the last few power hours. I've been saying there's a lot of bearish divergences developing. I don't like the market. My bias is negative, and sure enough, look what's happening now, right? It's taking another dump today. And I think this is the start of a much, much bigger correction. All I have to say is be careful if you're trading, if you're actively trading. I am short Apple, and I am short the triple Qs. Like I said last week, that's what I'm looking to do. Where the correction ends is what the market tells me, right? I trade what's in front of me. I can't guess, but yeah, with that said, let's get into the topics. The first topic I'm going to talk about is actually something I've been talking about it for 2 months now since I started this channel, which is the U.S. debt. Okay, from Yellen to Powell to now, which I believe that these people run the country. By the way, Larry Fink, the CEO of Blackrock. If you guys believe it, I believe it. I think BlackRocks and Fidelities and many other extremely powerful entities run the country. I don't think it's the senators. I don't think it's anybody else. Well, senators to a point, definitely not the president. These people have immense amount of power, and he's joining the bandwagon, my bandwagon, because I've been talking about this U.S. debt being out of control for 2 months now, and I've been talking obviously privately with friends for years, right? And it's just getting worse and worse. And Larry Fink, the CEO of BlackRock, says America's $35 trillion national debt will be a big burden on the backs of our children. I mean, I urge you, plead with you, just go back to a few hours ago, what I said about my kids. And I directly said, I feel horrible for my kids. I'm on this planet, hopefully for another 20 years, but what they're doing to the average American through this spending out of control habits is unconscionable. Okay. Now, certain people have control over this, obviously. Who are they? That's the Congress, right? So Congress creates the fiscal policy, and the Fed follows with monetary policy to support that fiscal policy. Well, the Fed's hands are kind of tied. Not that I'm a huge fan of the Fed or Powell or Yellen. Yellen is in the cabinet, but Powell is just following what he has in front of him, just like I follow my trades by looking at charts, right? So the problem with this is that this is going to create a massive, it's like figure out you're in jail the old days. You had a bowl and a chain attached to your leg. This is what's happening to the U.S. now. That 35 trillion is becoming a massive ball and chain that the economy has to drag around, and it's more blood is getting sucked, more energy is getting sucked out of the economy. Although the economy supposedly is doing well, I don't think it is. I think the average American, the middle class, whatever you guys want to call that, I don't think middle class exists anymore. We know what happened with the printing of the money, and because Fed had to print money to save the economy, because our economy is 80% of our GDP is consumer spending, right? And then when COVID hit, Fed printed $7-8 trillion, pumped it into the economy, and that created the inflation that we've been experiencing over the last 2-3 years now. And inflation on the average American is like a tax hike. Okay, we're all paying for it, including myself, including all of you who watch this now or later. I am disgusted with this, and I cannot emphasize that enough. I am disgusted with it. What can I do? I mean, I can run for politics, locally, start locally, city council, and then move on. I think I am such a straight shooter that they will probably find some dirt on me from the past 40 years and this 35 years in this country, and they'll probably shoot me down. But I am disgusted with this. Okay, I feel horrible for my kid's future. I have a daughter who's going to med school, college, and I keep talking to them and I keep explaining this to them. And I hope this is fixed. I doubt it. I don't see, my crystal ball doesn't say so. But so Larry Fink of BlackRock joined the party. Welcome, sir. Much appreciated. Billionaire. He's a billionaire. He doesn't have to worry about much. I mean, we know what has happened to the 1% versus the 99% in this country. Again, I'm a capitalist. I'm not a socialist. I hate the government. I do not like the government, what they do. I have no trust in the government. That goes back to my roots from being from the Middle East. Initially, I'm an immigrant, obviously, but I have come to this country. This country has given me everything I have. I'm appreciative and thankful for it. But what they have done last 15, 20 years is just disgusting to me. Absolutely disgusting to me. And I see the writing on the wall. It's not going to get better. Okay. So billionaire Larry Fink has added his name to the growing chorus. Yeah, welcome to the chorus, sir. This is my message, not just to the US, but every country right now will have rising deficits. No one is spending enough time talking about deficits. Sir, I'm here. I know nobody knows me, but I've been talking about this for years, and now publicly on YouTube for at least 2 months since I started the channel. Literally every single episode, I talk about this. Okay. And no one is spending enough time to talk about the deficits. Yeah, well, because they don't have to, right? I mean, who are the deficits hurting? The average American, not you, sir, with your $30 billion sitting in a New York penthouse. I'm not trying to bash any of these people, but I don't think they truly care. I think it's more of a photo op or PR. They just have to say things to look good. And we need to be finding ways to minimize the role of the deficit on the economy. Yeah, good luck. How do you do that? How do you do that, sir, when the deficit is $1 trillion, okay, every 100 days is getting added to that 35 trillion now, okay? Well, yeah, how do we do that? Deficits on the economy, on interest rates, on inflation. Well, yeah, all right, cool. The main concern of experts isn't simply the volume of the debt. It is the volume of the debt. We're at 35. We're about to get to 36. By the end of the year, we'll be at 37. Indeed, a certain level of debt is necessary. I agree, completely agree. Debt is the oil of the economy. I have debt, but it's controlled debt. It's according to my budget debt. It's not out of control debt, okay? Everybody should borrow money. Everybody should have good credit, but it shouldn't be abused. And we know what happens when you abuse it. And, you lose your job, then what? You're going bankrupt, right? I said this again in previous shows. I think US is the much bigger version of Greece, right? The only difference is Greece cannot print money, and we can't print money because the dollar is still, supposedly, is still the, chosen currency of the world. And that's the only reason we can get away with any of this. So as America's national debt nears 35 trillion mark, BlackRock CEO Larry Fink has warned the country's growth must keep up in order to pay the bills. Yes, that is the problem. But what is happening, sir, with all due respect to you and to Janet Yellen and to Powell and all the idiots in Washington, is this. Our consumer spending is 80% of GDP. Consumer is pulling back. Once consumer starts pulling back, economy cannot grow. We cannot just keep issuing plastic to people and expect them to spend and go to their limits right away on these new credit cards. That's what we're doing. We don't create anything. We don't have manufacturing. We don't have anything. All we do is just buy shit that we don't need. And the banks facilitate that by issuing more and more credit. It's borrowed money. The people, the average person is doing the same thing. The government's doing the same thing. Everybody's doing the same thing. It's out of control. And the United States public debt is an issue that has been steadily climbing in the national agenda. Jerome Powell believes it's past time to have an adult conversation. I would love to interview Jerome Powell. While JP Morgan CEO Jamie Dimon believes debt is the most predictable crisis facing the American economy. Okay, so we have billionaires and we have poor me saying the same thing. So we're agreeing, actually. But then what is the solution? What is the solution, right? The solution is have a goddamn balanced budget. Stop spending the money you don't have. I cannot run my household with a blown up budget. And these people don't do it. They just talk about it. Why don't we balance the U.S. budget once in a while? How about that? We had that balanced budget amendment, but then every time a crisis comes around, what do? We chuck it, put it in the trash can, and then we go, let's print some money. Let's save the economy. Let's save the people who ran bad businesses. Let's have too big to fail. let's do all this stuff. Let's keep him alive. Let's keep him alive. Well, no. If you're running a bad business, you deserve to die. So what they should do is they should let the bad businesses go away, and good businesses by smart people who know about budgets should get created. So I don't want to rant too much more, but I am disgusted with what is going on. So hopefully you agree with me, guys. And pass this pass this power hour along. Please share it. Help me get to 1,000 subs. I appreciate the support, but at least there is somebody here out of the average American that is feeling the pressure and talking about this issue. So the next subject, a lot of these subjects are going to be kind of related to each other today, because I will not be able to share my screen with you because I cannot log on to Schwab due to the CrowdStrike and Microsoft problem. And that goes to show that proves one thing, that you need to have backups in this world. And, backups are important because at the moment, I have no idea where my Schwab account is, honest to God, right? I mean, I can open it tomorrow and then $150,000 will be gone. I don't know. How do I this is the problem with the internet, by the way, right? But then we depend on it to do everything on it. But then now I don't know what's going on. But again, it is what it is. You just roll with the punches. So the second topic I want to talk to you guys today about is who needs the low interest rates? Is it me? Is it you? Yes, we do, because what has happened? Inflation kicked in. What did the Fed do? Fed raised the rates from 0 to 5%, literally in a year, right? So what happens? Well, when they did that, after having 0 interest rates for 10 years, right? Everything we consume and borrow on skyrocketed. 4% mortgages are now 7.5%. Okay, credit card interest is over 40% now. Well, not that it used to be. When it was 0, it was 25. That's another crime in its own, to be perfectly honest. But then, if you're managing your debt, if you don't borrow on the credit card, yes, you can use credit cards, but then at the end of the month, pay the balance. Don't carry over balances, because the shit you bought for $100, okay, and if you create a balance with that $100, that $100 item that you bought by the end of the year is going to cost you $200, and you already have used it. How much sense does this make? It doesn't make any sense. So if you're going to use credit, and in fact, it will increase your credit, don't carry over balances. You buy the stuff on credit. Actually, credit is a wonderful thing. They're giving you money, free money, literally. You're floating their money for 30 days, okay? You buy the stuff. At the end of the month, you pay your balance. Once you pay your balance, your credit actually will go higher as well, the credit score. So all I'm saying is that use credit. Credit is wonderful, but don't abuse credit. Most people abuse credit like we do with the U.S. government. We're abusing credit, right? Because we're the currency of the planet at the moment for everything, right? Although petrodollars have gone away now, the BRICS are getting away, from U.S. dollar transactions, right? I mean, we can see the writing on the wall. I talked about this in the past. So who needs lower interest rates? We do. We want lower mortgages, so housing activity picks up again. We want lower mortgages, so if we're going to buy a car loans, instead of being at 10%, are going to go back to 6-7%. We need it. I can see the strain in the economy. I can see the strain in the average American's pocket. But guess what? The entity that needs it the most is actually the U.S. government. Why? Because annualized interest payments on U.S. federal debt just reached, this is just annualized, single year, an all-time high of $1.14 trillion with a T. I think there are 16 zeros in a trillion. I don't know, maybe 12. Whatever. That's not the point. Imagine this. On that $35 trillion debt that we have created, just the interest, because that's an IOU. We have to pay people interest to hold those bonds, to hold those IOUs, right? And they have to get a return. So this is their return. So we're spreading $1.14 trillion around the globe, and many U.S. pension plans and, a lot of individuals, obviously, are collecting that interest. Now, that's a good thing, right? So one good thing about higher interest rates, by the way, has helped is the retired folks, right? They had cash earning 0 for 10 years. Now, at least on a CD, they can get 5%. Now, it's even a 4 or 5% after the counting inflation into it, they're still, the nominal return is zero still, but at least they're getting something, right? And so that level of debt, it has created $1.14 trillion in interest payments. Think about this. This is more than double the amount of interest recorded in 2022. Why? Because the rates were zero or close to zero, right? So see what's happening here, right? The servicing of that 35 trillion is costing double now in just a year and a half, okay? 2 years. Well, if the rates stay this high, that number is going to keep going higher, because the average interest rate now on the 35 trillion debt is only about 3.5%. That's why we're at 1.14 trillion. But what is happening is that the bonds are maturing. The IOUs that we issued in the past are maturing, which probably had lower interest rates or 1-2%, right? Now we have to put on 4 or 5% on that. Well, guess what? This 1.14 trillion, if the rate stayed at this level by the U.S. government, the federal fund rate and discount rate, and the 10-year, 20-year, 30-year bond rates stay at 4 or 5%. Ultimately, that's going to catch up, and this 1.14 trillion is going to go to 1.5, 2. That's what's going to happen. So, to put this into perspective, all of it, even during the 2008 financial crisis, annual interest costs were only 450 billion. It should be zero. Why do we have to pay interest to anybody, right? Because imagine that. Imagine we take that $1.14 trillion, use it for some good in this country, right? We know what's happening to our homeless situation. We know what's happening to the average American. We could use that $1.14 trillion to do some good. No, what do? We just blow it. We just put it on fire. And to put this into perspective, even during 2008 financial crisis, costs were 450 billion, or 60% lower, because during that time, the Fed had to lower the interest rates to zero to save the banks, to get the economy going again. So from 2008 to the end of the pandemic, about 12 to 14 years, we had ZIRP. ZIRP is zero interest rate policy. That's what we did. As a percentage of GDP, our GDP is about $27 trillion now. As a percentage of GDP, net interest cost this year is on track to exceed the 1980s high of 3.2%. Because this is the only saving grace. What has happened is that with this debt, we have pumped up the economy to the GDP level of 27 trillion. So that's why a lot of people are going like, yeah, it's not a big deal. It's only 3.2% of, the GDP. But then I go slap them in the head and I go, pay attention. That is just the interest. Okay. So our GDP, well, it's simple numbers. Our GDP is 27 trillion. What is our debt today? 35 trillion. That's 120% plus of GDP is our debt. How can you run your house like this? US, Congress, what's happening? 120%. That's the highest debt we ever had. Imagine now if GDP slows down, right? If the consumer but slows down their discretionary spending, and GDP goes from 27 trillion to 25 trillion to 23 trillion. Still a massive number, don't get me wrong. So GDP is going this way, debt is going this way. You guys get the picture yet? Okay. So by comparison, during World War II, think about this. We're going back there. Net interest expense as a percentage of GDP was much lower than 1.8%. So now the net interest only is at 3.2%. And look at that chart. Look at that chart on the right-hand side with a big oval I put in for you guys. So bottom line, I agree with this. The U.S. government needs lower interest rates more than anyone. We need lower interest rates, but the U.S. government definitely needs lower interest rates because this is out of control. The IOU payments are out of control. Okay? So look at this, right? Look at this chart. It's the cost of the U.S. debt. Cost meaning the interest payments, right? It goes back to 2005, right? Look where we are today. This is up to date from Bloomberg. We're at $1.14 trillion. Look what has happened. You know why that happened? Because interest rates. Fed had to pump up interest rates because they created a man-made inflation problem. Look where we are. Anybody like this? Now, I like trends in stocks. If that was a stock, that would be wonderful. Except that's not a stock. On that one, I would like to have from the upper left-hand corner to the lower right-hand corner kind of a chart, right? And this one, this is going parabolic now, meaning straight to the skies. And I'm going like, no, this is not manageable. This is ridiculous. But then, I'm just a person. So But hope you're learning this, and hope you go talk about these in your own communities. This is a national problem. This is not a personal problem. It is a massive personal problem for a lot of us. But if we can manage our budget, we can stay out of trouble. These people in Washington that you guys elect seem like they love spending your money. Okay. And the problem now with all of this is that most of the tax receipts that are going into the Treasury are coming from stock sales, right? We know what has happened to that. Well, if the market starts tanking, right, which there is a high likelihood that's going to happen because I think the gig is up, is what, right? So those receipts are going to dry out as well. And economy slows down. Look, I'm not a doom and gloomer, right? I love glass half full, but they are sucking the life out of this economy by doing what they're doing. And I would love for all of you to take snippets of these segments of these shows and go talk and have like a fireside chat with your friends and relatives and saying, there is this guy here that he's talking to the reality. Maybe we should start listening to it and spread the gospel. Because one day, if I do run for office, this is going to be talked about anyway. So next one that I want to talk to you guys about is, these are all related today, as you guys can see. U.S. consumer credit, right? All right. Okay. U.S. consumer credit. Let's start with the chart on this one. Credit card write-offs have been on the rise at Citigroup. Of course they are. Because you guys issue the plastic, you guys make people buy stuff they don't need, and then what? They default. I mean, simple as that, right? So U.S. consumer credit card write-offs at Citibank hit 6.5%, the highest since at least Q2 2022. Well, one thing that could happen during the pandemic is that the Fed printed the 7-8 billion, but then put the money in people's pockets because they were stuck at home, right? Okay. Well, that money is all gone now. I've talked about this in previous power hours, showed you guys the graphs. All that savings is gone to negative now. Well, now what do? We ask for more plastic and spend more money we don't have. Well, or we start defaulting on the plastic that we got and we borrowed on it. Well, first we don't pay the bills. That's the first sign of trouble. Okay. The percentage of net credit card losses at the retail services division has more than doubled in the last 2 years. This is Citibank. This is not a joke bank, right? But this is happening throughout. This is happening with the regional banks. This is happening with massive banks like JP Morgan's, Bank of America's, and with 2.1 trillion of excess savings depleted since 2021. That's exactly what I said. Consumers are struggling to pay off credit card debt. No shit. Yeah. This is what happens when we create this economy that depends on consumer spending, and the consumer spending that takes place is all impulse buying because the bank just gave you another credit card with 10K credit on it because your credit is good, right? You go, oh, I'll just have 10K, I'll just go spend it. No, it doesn't work like that. As a result, Citigroup has started shuttering unused credit card accounts and raising its capacity for collecting bad debts to manage its losses. This is reminding me exactly of 2008, what happened with the financial crisis, right? People were borrowing money on their homes, and I was doing a lot of those loans too, by the way. I'm guilty as charged. And then what? What happened, right? We all know what happened. Millions lost their homes because they used their homes like an ATM machine or a credit card. This is not a pretty picture, people. So meanwhile, Wells Fargo and JP Morgan net charge-offs from their credit card businesses jumped 60% in Q2 2024. Think about this. U.S. consumers are struggling to pay off debt. No kidding. You know why that is? That's because of inflation, man-made inflation that was created. How many of us, okay? Inflation runs 5 to 7% a year. Don't listen to the government. Government's all hocus pocus. They say it's just 2%, 3%. No. It's 5 to 7%. So your money, if you had $100 bill, figure it out that way. If you had $100 bill 10 years ago, it's still the same $100 bill, okay? 10 years ago, you had a $100 bill. You're losing 5 to 7% of your value every single year. So let's just take the middle, 6%. Well, that $100 in 10 years has lost 6% every single year of its value, meaning its buying power, right? So that $100 10 years ago, today is only worth $40. And we know that because when we go spend $100 10 years ago versus we go spend $100 today, what we can buy with that $100 10 years ago versus today is completely different story, right? So now the consumer goes, well, I'm tight. I can't pay my credit card balances off. So I'm going to default. Okay, great. So what does that create? Well, you're not going to be issued more credit now because your credit score is taking a beating, right? Now the banks start cutting credit. That's what will that do? That will slow down the economy. Remember the GDP I talked about, 27 trillion? Here comes GDP going lower and lower and lower, right? And here goes the debt going higher and higher and higher. There you go. Welcome to the US. Welcome to the upside down economics of the US. Now, I'm a simple person, right? I mean, I have my background and I have my stuff together, but how is this allowed going forward, right? And I'm not liking the picture, but then again, please, these are, to me, these are topics that I talk about when we have get-togethers with friends, relatives. They don't even have to ask me because conversation goes automatically to this. I'm tired of talking to this, right, about this. But what they do is because they know I'm in finance, they go like, what do you think about this? And then the conversation starts. But then the other thing that starts is that they're experiencing exactly this. They're having a difficult time struggling to pay off debt. So then they ask me, what should I do? I'm like, well, did you use credit cards to buy stuff you don't need for the last 3 years? They go, yeah, I splurge on this, I splurge on. I go, well, I mean, don't come to me now. I've been telling you this for 3 years. Debt is good, but managed debt is good. Debt out of control is going to bankrupt you. So, with that said, on this topic, we're done with it. Let's go to the next topic. So, as we know, Mr. Trump selected J.D. Vance from Ohio as his running mate. Young guy, 35, super educated, 30, 36, whatever he is. Yale law graduate. The wife, another Yale law graduate. Usha, I think is her name. Both super educated people, lawyers, obviously, which is necessary in Washington. Pretty much everybody's a lawyer in Washington. But I want to do the connection here. I want to do a little bit of a connection. As you guys know, I like Bitcoin. I've liked it for years. And even with the market selling off now, as we can see, Bitcoin had a little dip to like 58,000. Now it's back to 65, 64,000. And it's holding here. Last few times when the market took a beating, Bitcoin took a beating with it. It seems like it's separating itself and people are just joining the party of like, okay, US dollar is worthless. Okay. If I park my money in Bitcoin, at least it's going to hold its value. Plus, Bitcoin is anti-inflationary, right? Because there is a finite amount of it. It cannot be recreated. It cannot be added to like we do ourselves with, not ourselves, but the US government with printing the money and adding to the debt going this way, a trillion every 100 days. Well, at least Bitcoin, helps you guys manage, at least hold the value of your money in a spot, park the money, right? So yes, it's volatile. Yes, it goes up and down, but 65,000. And I was thinking about this. And, in the past, Trump has said, that Bitcoin is like hocus pocus and this and that. But then it seems like, J.D. Vance, by the way, a massive part of his portfolio is in Bitcoin because now that he's a public figure, well, he was a public figure, but now that, they have like Nancy Pelosi's account is her trades are put up on Twitter and everywhere else. There are actually people following these people's accounts. So he put up his net worth. The bulk of his net worth is in Bitcoin. Smart man right there. So what I'm saying is that the risk on Bitcoin got eliminated, first of all, when Larry Fink, BlackRock, Fidelity, all these people got into it with the ETFs, right? My biggest concern about Bitcoin was that the government one day is going to come and go, okay, no more Bitcoin because it's only used by drug dealers and it's on the black market or, the dark web to do illegal things and things like that, right? No. So now the government risk is pretty much all gone. That's why Bitcoin took that big leap from, about 25,000 to 65, 70,000. And now it's what's been doing. It's been going sideways for like months now, literally. If you guys look at a Bitcoin chart, for me, that's a positive thing. It's not a massive top to fall off of. I think it's going sideways to collect energy for the next move up for another double or at least 100K, right? So when actually Trump survived the assassination attempt, the next day, Bitcoin, that weekend right there, because Bitcoin is traded 24 hours, 7 days a week, Bitcoin was about 59,000 and it jumped to 65, 66,000 because Trump survived the assassination attempt, right? And now it's holding there with the stock market selling off, right? So Trump factor is a positive catalyst for the world's largest cryptocurrency. Bernstein analyst says, and JD Vance, as his running mate, further stoked Bitcoin investors' optimism about the prospect of self-proclaimed crypto President Trump. Now, I don't know about this, and this political stuff. My issue is I believe in Bitcoin because there is some sort of nuance and value to it. It has never been hacked, okay, in, I don't know, 14 years now. Everything is transparent. It's on the blockchain, right? Every single transaction. Even if, like what happened to me with Schwab today, Bitcoin ledger is still continuing. It never slows down. Even if we had a global power outage and all the nodes, as they call it, the computers that control the network, go down, it just goes to sleep. Nothing happens. When it comes back up, everything is there and ready to continue, right? So the crypto market interprets a scenario of Trump win as more positive for crypto, and Bitcoin's price is positively correlated with the probability of a Trump presidency. By the way, how many of you think Trump is going to win? And how many of you think Biden is going to win if he's still around after this weekend? Bitcoin is up about 10% to 65,000 since Saturday failed attempt on Trump's life, correct? Which subsequently boosted his probability of prevailing in November's presidential election. Absolutely. And Bitcoin will continue to be sensitive to the election. Obviously, it's volatile again. But then the volatility is kind of subsiding though now. It's not like the old days that it would go from 10,000 to 60,000 back to 10,000. Now we're just seeing this balance here. The reason for that, obviously, are the ETFs, right? Billions of dollars is going into these ETFs by the public, and it's supporting any pullback. And I talked about this a couple of weeks ago when Germany put up, about 1,400 Bitcoin to sell from drug dealers that they had collected. Yes, the news pushed it from like 65,000 to about 57,000, but all that got absorbed. In the old days, if that many Bitcoins coming to market to be sold would have tanked Bitcoin to like 30,000. So you guys must understand what's happening here. Lastly, among the reasons Trump is seen as more pro-crypto is support for domestic Bitcoin mining, because, Trump believes in a lot of the domestic economy, and obviously the power grid is something that's under scrutiny by the Democrats. They have the green agenda, all that stuff, right? I'm going like, okay, so they've been kind of hurdles. And in fact, last week I gave you guys a trade on Clean Spark Energy and Marathon. Go watch last week's part of my watch lists for the week where I go through stocks. I mean, after that, in 3 days, Clean Spark went from 15 to 21. Mara went from 22 to 28. Yeah, they pulled back a little bit, but I'm giving you guys trades. I'm trying to keep you guys involved in what's happening, because it's not easy to find out stocks. But then today, unfortunately, I'm not going to be able to do the watch list for you guys because I have no screen. I have zero. I have an idea of what's happening, but I cannot trade because my main trading account is at Schwab, and Schwab is down due to the CrowdStrike issue. Hopefully, see, all these people now are saying that it's not an attack, it's not an internet thing, and I'm going like, I sure hope when I have access to my account somehow, because I tried to call the support. An hour and a half I was on hold, but I had to do the show, so I had to hang up. So I hope my money is there. I shouldn't be laughing, but then when you're like, it hurts really bad, you start laughing. It's like a boxer getting hit in the head with a good shot, and they laugh. I go like, yeah, you only laugh when it hurts. So we'll see what happens. So I'm, I like Trump's attitude about Bitcoin, and I think it's going to continue to party. And so on this subject, we're done with this. Next one. So actually, let's just read a little bit of this. Okay. So despite the crypto market's apparent support for presidential regime change, see, this is like the pro versus the con, right? Despite that change, there have been several big wins for Bitcoin under Biden, which is true. What was that? ETFs got created. I mean, think about it. Gary Gensler, the head of the SEC, allowed, after years of denials, right? They allowed for Bitcoin ETFs to get created. So Biden has not been disastrous for Bitcoin. Actually, they've been positive. Since election day 2020, Bitcoin is up almost 400%, correct? Jumping from about under 14,000 to almost 64,000. Most crucially, Biden-appointed financial regulators approved the first-ever spot Bitcoin exchange-traded funds, the ETF by Blackrock, prompting billions of dollars of institutional investment and personal investment into Bitcoin. Much of the crypto community's criticism of the Biden administration has focused on Securities and Exchange Commission Chairman Gary Gensler, another gangster right there, who allows short selling and destroying of good old companies, but then I'm guilty as charged on that as well, who has often been critical of the space. But then he got overruled and Bitcoin was created. And obviously, we know what happened with FTX, Sam Bankman going to, Binance, the both CEOs are in jail. I mean, look, those are the growing pains, and new asset class experiences, right? And it was Bitcoin being used for a lot of shady practices on the dark web? Absolutely. But then those days are gone now. Now this is an institutionalized asset class. When institutions are involved, institutions will not invest in something that they think is going to go away, like poof, disappear, right? The only problem now I see for Bitcoin, that's the only problem I see, okay? It hasn't been hacked for 14 years, the blockchain. So I'm kind of okay with that because by now, in those last 14 years, everybody got hacked, including the IRS, okay? The only problem I see with Bitcoin now, if there is some code written somewhere that nobody knows, we don't know, we just go with what we know, there's about 21 million of these things out there. And 19 million plus have been already mined. There's only 1.5 million to go, right? So mining is still continuing, but with the halving that is happening, I think every 3 years or so, or whatever it is, the miners are able to mine half as much as Bitcoin as they did before, right? So that's also slowing down, right? So I'm going like, okay, but if tomorrow, God forbid, if somebody comes and says, oh, by the way, we were creating another 10 million, 20 million Bitcoin, right? The reason this thing is holding up and price is going up because it's a finite amount of it exists, unlike the US that can add zeros to its ledger, like Federal Reserve Chairman Powell says, right? So I'm going like, okay, if that happens, then Bitcoin goes to zero. There's no trust left; it will crash. I doubt that. I hope it's not. I hope it's not going to happen. But then you never know. In the markets, things happen. So that's about Bitcoin and its relationship to the current, well, not current, current administration and potentially the new administration in November. So one other thing I want to talk to you guys about. So as you guys know, market is taking a beating this week. Okay, it started on Monday. Actually, started positive after the assassination attempt. That's when I actually shorted Apple and the market because I think news is already in there. So I wish I had my charts today, but then I'm going to have to go through this quickly and explain it. But then you guys can look at it if you have access to charts. There is something called Volatility Index. The symbol is VIX, V-I-X. So VIX goes in has an inverse relationship to the market. So when the market's going up, VIX goes down. When the market goes down, VIX goes up. So for the last 3 days, VIX has gone from 12% to about 16% now. The high in VIX is in the 40s and 50s, but that only happens when crashes take place, right? Volatility gets out of control, option premiums get expanded, all kinds of bad things happen, right? All kinds of earthquakes happen in financial markets. Is it going to happen that way? I don't know. But as you guys can see, this was from yesterday, and today VIX is at 16. You guys need to start following that to anticipate a downdraft or a drawdown in markets. So historically speaking, volatility jumps by 25% between July and November in an election year. We are expecting larger swings in stocks, so to become the norm in Q4 of 2024. That is correct because we've been used to a very low volatility period for at least since last November. Last time VIX got up to 25 was last November when the market happened. So also, it's a good inverse indicator when the market is about the bottom. When VIX goes up to 30, 40, 50, you guys know the bottom is near. But that means the more volatility is created. So volatility is good for me, for my trading. Volatility is my friend, okay? And because if the market keeps grinding higher and higher, it's really difficult to make money. But when the volatility starts happening up and down, that's when I make most of my money. So the volatility index spiked 10% today, which is yesterday, when the market was down big, to its highest level since May 30th. as the election and the rate cuts approach, we should see VIX push higher. I agree 100%. And the next few months is going to be very interesting, not only in volatility index, which again, the symbol is VIX. It's you can put it on your Google and then get the volatility index, get a chart of it, and you guys will see the history of what it means. So when volatility expands, right, the moves in stocks, underlying stocks like Nvidias and Apples and Metas and Microsofts and AMDs, they're all Teslas are get wider and wider and wider. So there's a percentage that a stock will move without catalyst on its own. That's called beta, right? So if the market goes up 1%, if the stock's beta is 2, stock will move up 2% or should move up 2%, and conversely the other way. If the market moves down 1% and your beta is 2, the stock should move down 2%. There are stocks that are 3, 4, 5 beta. Okay, so when the market moves 1%, that stock is expected to move 4 or 5% on the average. But what happens is that when the VIX volatility starts expanding, that beta keeps expanding on the stock as well. So now a stock that's average moving 3-4% beta or 3-4% with a 1% underlying move in the index will start moving 6-7%. So when that expands, that's when the opportunity comes in. Like moves are exaggerated, and if you're on top of it, you can make more money that way. It creates more opportunity, but potentially it also creates more losses. So risk management is absolutely, absolutely key and necessary for you guys to pay a lot more attention now when volatility expands. Because when the market's going up every day, volatility is at 11-12%, VIX is at 11-12, it's grinding up every day. Easy money, just close your eyes and buy something and it'll go up. Well, now the game is changing a little bit to the pros' favor, because I've seen a lot of internet comments say, oh, I bought these options, they're about to hit the wall. I'm like, yep, this is what happens. It expands, and then you're on the wrong side of the market. So you make sure you're on the right side of the market. So that's about VIX. I wish I could share the chart with you guys, a live chart, but I cannot. And last but not least, this is my little Robinhood account. Beginning balance was 1,000. As of last week, I was at 3,086.96. And as of 9 a.m. today, I was at $3,377.94. I'm short certain things. I'm long certain things. I bought AMD too early. I'm eating a little bit there. Otherwise, this should have been at 4,000 by now. However, this account, you guys can follow me if you go download the app called After Hour. I did it. I tested it. I can talk to you guys about it. But if you guys want the way to do it, please go watch last week's Power Hour. The app is called After Hour. It's like a purple yellow app. That's all I can say. It's in the Google Android and iOS store. Once you download the app, you have to go search for Surge 8 stock. That's my name or ID, I guess, on After Hour. SERG number 8 STOK. I thought that was funny. I eat stock. I don't know. I created that screen name. And so once you do that, you start following me, and then it will tell you, you will exactly see this hour by hour, day by day, right? Because what I did is I went and attached my Robinhood account. I wouldn't dare do my Schwab account, but I attached my Robinhood account and verified it. I have a check mark next to my name. That means Robinhood and After Hour app are talking to each other constantly. They're kind of networked, they're connected. So you guys can see my balance move up and down, my losses, my gains, what positions I have. You guys, full transparency, you guys will be able to see it, because a lot of people were asking me, Serge, yeah, you're making money. You're doing great. You're up 300+% or 200+%, whatever it is. But we don't know what you're doing. I'm going like, yep, there's a point to that. So I found this app and I did it. So you guys can go download it and follow me there. And that's where I'm going to end my stream today. And let's answer some questions if there's any questions. Not too many of you here. This is disappointing. Only 6-7 of you. I was expecting in 2 months I have like 100 people watching me live. So we're doing this Power Hour every Friday, right? Because it's the end of the week, 10 a.m. Pacific, 1 p.m. Eastern. I'm going like, yeah, people will be kind of interested in listening to my jibber jabber for about an hour. I guess not. Maybe we'll have to change the day of this. I don't know. What do you guys suggest? What day should I do this? Because by now I'm thinking like I should have like 50 people watching me live. Not that I care. From the other channel, plenty of people watch me live. But what I'm trying to say is, I think this is so much better than the other channel. The other channel is boring. This is like things are changing. It's potentially making money. You have total control of what you're doing here. So I don't know. I'm kind of disappointed in that, but I'm at 975 subscribers. Please help me get to 1,000. Refer, share the links, do whatever you guys need to do. 975 of you start sharing. Maybe I'll get over 1,000. So let's look at questions. This is being Friday. The stock market, William says, yes, taking a big shit. It's been taking a big shit for the whole week, William. But I've been talking about it. You can't say I haven't been talking and I've been negative about it. So you go back and watch. You guys know what I've been saying. I had a negative bias. I think, yeah, okay, William says again, hi, Sergio. Hi, Ryan. William says, I think you have some great insights. Now, why the big sell-offs? I'm not sure. First the big gains, then falling. That's what the market does, William. Market goes up the stairs and takes the express elevator down. That's how things work in our world. If you know me enough and if you followed any of the past comments and power hours, I have always said that my market takes stair step up and then it takes the express elevator down, and it seems like it's taking the express elevator down. Again, if you've been watching me for a long time, not long, about 2 months now on this channel, from the first week I said I have a negative bias, right? Market kept grinding. Now it's kind of correcting. Still in a decent uptrend, but I think the uptrend is being broken today. So that's the reason. Nothing goes up forever, William. You know what I mean? Trees don't grow to the sky. Those are all my old 30 years ago mentors saying. So pay attention. And I even actually perfectly timed, actually, about 3 weeks ago when I did the power hour, I told you guys how you'll be able to make money when things turn bad and start going down by put options, by shorting the market, shorting the futures. I explained all this. You guys should have been ready. Okie dokie. All right. So that's why I can't get in. All the IT pipes into Schwab, I don't know what the heck is clogged. It's down. If you're Schwab with me, William, we're screwed. Well, hopefully we're not screwed. Hopefully my account's there and my money's still sitting there. We're dealing with inflation in Japan, dealing with deflation. We dealt with deflation in Japan for a long, long time, right? Deflation is actually much, much worse than inflation. Inflation is actually good. It's like juice of the economy. About low inflation, not like 5, 6, 7%. Maybe like 0 to 2% inflation is good. It gives companies pricing power, and people can still afford to buy crap because it only goes up 1, 2% a year, right? But that, if you figure out deflation is opposite of inflation. That means all assets go down. House prices go down, and GDP collapses, and stock markets collapse. Earnings power is not there for these mega sevens and all these companies, right? So deflation is no pricing power. It's a horrible thing. And Japan spent, I don't know how many, 20 years plus to get out of the inflation, and they kept their interest rates at zero. See, you don't want to get to deflation, and you don't want to get also hyperinflation. You want to just kind of go meddle around. But when you keep printing money and you get it out of control and inflation comes, and obviously when a pandemic happened, the government had to spend $7-8 trillion. I get it. It wasn't expected, probably. I don't know. I'm sure there is enough conspiracies out there. But what I'm trying to say is that both are not good in extremes. Deflation, but by far worse than inflation. I agree with that. But too much money was printed because, yes, correct. No one would cancel you in my ass. I don't care if they cancel me. I'm from the East Coast, William. Not much bothers me, buddy. What is the U.S.? What the U.S. has to do is open the energy as well. Yeah, that's a little political. I'm not going to touch that with the owls and bears in Alaska. Yeah, okay. William is on fire today. Okay, my cards are maxed. Oh shit, I didn't want to read that comment. I did not want to read that comment. My cards are maxed out. Why are they maxed out, William? Don't be like the U.S. government. They were all paid off before SARS 2 in 2019, and you got money during COVID. You should have like a massive savings account instead of having your cards maxed out. I don't like it. I don't like it. Okay, Uber and Lyft, goddamn, you should start investing 2 months ago. Look where you'd be. If you followed any of my trades, you would have bought that Instead of with your city card, you would have bought the brakes and whatever you did, tires, literally for free. Well, not for free, but you would have made money. Okay, yeah, paying the minimum, but you're getting hammered by 35-40% interest, William. Please stop the madness. Please, please, please stop the madness. Do everything you can to just pay those things down. It's going to hurt you mentally, financially, every which way. Okay, William is on fire. William, I sold it all but 100 of my Bitcoin to pay for my car. Okay. Okay. William is just not spamming. William is just venting out. Joey BTV says, great job, Serge. Slow and steady wins the race. Absolutely. Although my little Robinhood account going from 1,000 to 3,300 is pretty damn good in like 2 months, man. Yeah, William knows what he's doing. Yeah, that definitely. This is not boring, William. That's the other one. Traveler says, thank you. What about Trump's plan to opening energy? We'll see. No, country's debt is never going to get paid, William. I'll finish with that. Because under Trump, the deficits went up. Under Biden, the deficits went up. These people, look, I'm not going to say who I'm voting for or whatever, but both parties are guilty as charged. Okay? Period. They love spending money that is not theirs. They're put in Washington to take care of the people. They are not. They all lie. All of them. But they do get rich. Okay? Look at Nancy Pelosi. Her stock trading account is up like $150 million since she got elected. Maybe more, $200 million. So as you also understand, you have to understand, these people spend tens, hundreds of millions of dollars in campaigning to get a job that's paying like $250,000 a year. How does that make any sense? That means there is some ancillary benefit of being elected. And that means they have strings attached to them because whoever, put the most money in their campaign, I mean, sorry to say, it's vulgar kind of, but they're the bitch of the money. And when they get there, they write the laws that is beneficial to their landlords or owners, who are the ones that put in the money for them to get elected. Because without campaign money, nobody's getting elected these days, right? With social media, without print media, without all that, they spend millions and millions of dollars to get a job. That's like, I don't know, like figure the president. President, I think, gets paid $450,000-$80,000 a year, but they spend $200 million in campaigning. Like, how does that make any sense? So we'll see. Both parties are guilty as charged. So we're right on an hour. If you don't have any other questions, so again, sorry, I can't share my watch list with you. I apologize. Out of my control. But I talked about it. So let's talk a couple of things in my head. So I gave you guys the Tesla trade. You guys should have killed it. I gave you guys the AMD trade. You guys should have killed it. Although now, actually, I'm looking to buy AMD again at current prices. I think it was like 195. Now it's at 152 in about 4 days. So there should be a bounce. I will be buying some AMD, number one. A couple of other stocks I'm watching. Sorry, without the charts, I'm like useless. I think the market's on a downtrend now, short term anyway. Be careful with what you're buying, where you're buying. Oh, I'm also interested in buying Chipotle. Before the split, look, I remember all these. I have a photographic memory, okay? I put Chipotle and said it's going to split. After the split, most stocks go down 15 to 20%. Well, guess what? At the split, stock was about 70. Today, I think is right around 52. Earnings are coming out on Chipotle next Wednesday. I think stock will bounce either before or after earnings. So about 50 to 52, I think that's a decent buy on Chipotle. Nvidia, definitely, I'm not looking at it yet. I think I will probably look at Nvidia about 110. I think it was like 117. Tesla, definite pullback. I think about 200 is a decent buy on Tesla. I'm trying to recall like the pictures in my head. The market, I think, is going to go down. First of all, it's down about 4 or 5% already. I think this may be a little bit bigger correction than the 4 or 5% we're experiencing. And what is also happening, before I forget, another amazing trade. Go watch 2 weeks ago, Power Hour. I talked to you guys about rotation is going to happen. The only way the market keeps going higher, I said to you guys, is what? Is the Russell 2000, okay, participating in this rally. And I gave you guys the chart. I showed you the chart. The symbol was IWM, okay? Clear as day. Go watch the old Power Hours if you guys don't believe me. What happened to IWM? It went from 200 to 225 in 6 days. 6. While the S&P was going sideways, IWM took off. So the rally broadened out. That's like the tide lifting all boats. And that's exactly what I said and gave you guys the trade. Okay? Now, if you didn't follow it, not my problem. I'm giving you guys the trades. You didn't have to do it with millions of dollars. You do with $1, your return on percentage-wise is going to be the same as mine. Okay? Now, you're going to go say, Serge, you're only giving me your winners. Well, so far, I gave you literally nothing but winners, guys. Seriously. And I said, I'm negative on the market. I showed you my actual trading account, broke it down. I mean, I don't know what else to say. I created a way for you guys to follow my Robinhood account. I don't know, man. I think I'm doing a lot of work. So the 2 stocks I'm watching to buy, Chipotle about 50 to 52 for a bounce to 60. You can trade options. You can trade a stock, whatever you want. I gave you guys Serve Robotics, $2. Last time I looked, it was close to $8. That's 400%. So I'm just telling you guys, I'm giving you the expensive stuff, some of the cheap stuff. Another one, Tesla trade worked out. AMD trade on the way up worked out. Hopefully, second time up on the way up is about 152. I think 150 to 152 is a decent buy on AMD with a stop at 146 or so. I gave you guys what? Let's see, Carvana. I mean, the only loser I gave you guys was Alibaba, right? I bought it at like 78, 80, and then I got stopped out at 74, although it's back to 78 now or 77. But I don't care. You got to take your losses. I think it's been pretty good. What I've said has been pretty good. So enjoy the ride, because when I'm right, I'm right. When I'm wrong, when I'm cold, you don't want to touch me. Let's see. Chipotle is tasty. Eric Lee says, yeah, well, we'll see what happens. When I said numbers, I was referring to live views and subs. Your numbers on the account is, thank you, Joey BTV. I'm never satisfied with average. So average bores me. Okay, so I answered all the questions. Chipotle is tasty. Yeah, Chipotle is tasty. Their margins are good. Their expansion plans are good. But that stock was just out of control, overpriced. Okay, $70. That was before the split. They had a 50-for-1 split. When things split, people, by the way, they push splits up. I don't know why. Splits mean nothing. Nothing changes. Just the share count changes. I don't know why people think stocks should go up when they announce a split. That's the new craze. It shouldn't happen. And what happens is that it goes up. It happened with Avago. It happened with Tesla. It happened with Nvidia. It happened with Chipotle. How many splits, right? They all got to get pushed up initially. They suck the retail in, right? They distribute to the retail saying, oh, retail thinks, oh, my God, when the stock is splitting, it should go up. Why? Definitely not. Anyway, so now it's corrected. I think it corrected enough to be bought. 70 to 50 is a pretty good correction, literally in like 3 weeks, right? So the bounce will come, and then we'll make some money together. I'll get into what, William? I don't know. But anyway, so much love to all of you. Please stay healthy. Health is the most important thing, and be safe out there. And please thumbs up, recommend the channel to other people. Get me over 1,000 subscriber hump. And Ryan says, okay, last question. I was a loser on Conagra Foods for about a month, but I finally got out yesterday at 30. Got it. Okay, cool. So, but I don't know what the setup is Conagra was, how your setup was, but make sure you have your setups correct. Okay. You don't need to overtrade. I said this a million times from the first week on. You don't need to be a day trader. I cannot be a day trader. If some of you are doing it successfully, all power to you. I am a swing trader or a position trader, just like I did in Serve. I accumulated enough shares that I can trim some at 4 or 5 yesterday like an idiot, but now it's 8, but I have a few shares left. And thankfully, Schwab is down, so I can't sell. And hopefully it won't tank. By the time I have access to it, it'll probably like 7, 8, hopefully. I'll just sell the rest of it. Yeah, you got to make sure your setups are correct, okay? And the best trades, by the way, Ryan, are the trades that you buy something, it immediately goes against you. My best trades in my history of 30 plus years have been, I buy something, it goes against me, right? You don't average down, first of all. You don't do that. You don't, catch a falling knife. But what you do is when you get back to break even on that trade, or maybe tiny little loss or a little gain in your case, those are the best trades you can do. Because what's going to happen is then you let your winners run. While the winners are running, they're on the trend, they're doing the right things, you take break evens, you take small losses, break evens. That's how you double, triple your account every year. So with that said, much love. Apologies for the outage. I ain't Schwab. Now I'm thinking twice about using Schwab, but then I'm so used to their platform. I don't know. I have to relearn the thing, and I'm just, I've been comfortable with it for 20 years. So, but it's not a Schwab thing. CrowdStrike is the culprit in this situation. So much love to all of you. Please thumbs up. Please subscribe. Please talk about me to your friends and relatives. There's a lot of educational stuff in the back. Hopefully you got all the books that I recommended about technical analysis and options, because those are my favorite books. And then learn with me or learn from me. I'm still learning every day myself. But so I appreciate the support, and I will see you guys next Friday. Bye now.